All right, for the second panel, Bess asked me to um, focus on founders' perspectives on fundraising, in particular in Silicon Valley. We'll see how that goes. The panel's a little bit smaller than we thought it was, but we'll try and do this and have some fun. I thought maybe we'd start off with, maybe you guys could just reintroduce yourselves. And if you could tell us how much money you've raised, just to give people, raised for your current companies, to give people a perspective on how you guys answer the other questions that are coming up. Do you want to go first?
Well, Car Farm is a marketplace for automotive dealerships in the U.S. It's designed to carry a transparent reverse auction purchase process. And so far, we've raised 325.
Okay.
I guess I can talk about my previous startup, which I exited, and then the current company, IPEVO.
Okay.
Previous startup is it's called Agenda. It's a digital marketing company. We started in 1999, and we raised $20 million from a U.S. private equity, and that company we later on merged with another company in Singapore and Malaysia, and they brought in another VC from Silicon Valley, and we exited. It was acquired by the WPP Group in London in 2008, and so that's the story of my previous startup. And my current company is actually all angel funded, and a lot of it for myself because from the proceeds from my last company exit.
Do you guys see expectations changing on what angel-funded companies have to do before they move to the next level of investment?
Yeah, I think it's moving towards more traction and revenue, more so than proof of concept. I think a few years ago, if you had an idea and you start raising money, and then you do your proof of concept, and then you do your further rounds of funding. But now, in order to be considered, you really need to get more customer traction and things like that. So
I think from before when my first company started, angel investors were few and far between in between. So because they're all family or friends or industry or people that I know, we know. But I've seen recently. I've seen the number of angel investors increasing, and these guys they know the business because they have maybe entrepreneur themselves and exited, so they know the business very well. And I've found that it's actually very positive.
So both of you have been in companies that have been around for a little while. Have you seen the not requirements, but not just sort of the general expectations of angel funders changing over the course of the last year, but have you seen a shift between how much funders are focused on revenue traction versus just general user traction?
well, I think Royce might be a better person to answer that.
You talking about angel or just investors?
Even Series A, because I mean, I guess what I've been hearing is that, if you looked a year ago, if you had a lot of users and you had traction and you could show that your user base was growing, that was sufficient. And really in the last 12 months, people are going back to the basics of the business model of where are you going to make money, how much are you going to make it, and have you demonstrated that you can make money right now?
I have actually talked to quite a few Silicon Valley-based VCs over the summer because I was just getting my feelers out there. IPEVO, my company, is actually quite the opposite of what you're talking about. We have great revenue. We're actually profitable. I mean, it's that. So I thought that was very rare in Silicon Valley, but the reaction I'm getting is you guys are not explosive enough, or you need to be at 10 billion users, and you have to draw a picture that is big enough. But that's why. But we have revenue traction. We have profitability.
With Car Farm, are you finding that people are looking for revenue traction right away?
I think there's a set of investors that kind of have their own criteria of investing. So, car retail in United States is roughly about 15 million new cars per year, and the investors are looking for something like, you gotta have million users. They have their own criteria, so they want you to hit those metrics, and not all businesses are, especially like ours, doesn't fit that mold. And some investors, they kind of pass on us or whatever because they can't take the time to understand our business model or the market size and things like that. Not because investors want they're lazy or anything like that or stupid. It's just they have a lot of they're busy. So
we talked a little bit about crowdfunding earlier, and obviously AngelList and syndicates and all of that stuff. So I'm curious what you guys think about crowdfunding. I think with Car Farm crowdfunding for angel and seed investment, but then for your company, would you consider crowdfunding, at the stage that you're at?
From what I understand, the crowdfunding now as it exists, you still have to raise through accredited investors.
That's right. In the United States, that's true. And actually, for everyone, just a clarification. So the laws in the United States now are that if you're raising money, you can tell people that you're raising money, and you can explain exactly what the terms are, and you can sit on a stage like this and tell everybody what you're doing. However, in order for people to invest in your company, they have to be accredited. And in the United States, accreditation really just means how much money do you have. So I believe in order to be an accredited investor in the United States, and don't quote me on this, I think it's about $1 million in assets and $250,000 in income each year. And those rules were set up by the SEC to try and make sure that the people who were investing or who are investing in startups can afford to lose their money. That's what it's all about. So, and the reason why there was no open solicitation before was that the SEC in the United States was afraid that if everybody was out there advertising, hey, come and invest in my company, too many people would be losing their money, and it would be a bad outcome for the entire economy and in the entire startup industry. So, while the laws have relaxed on solicitation, they haven't relaxed on what you have to be in order to be a qualified investor. Would you go after crowdfunding at the stage that you guys are at?
The stage where we're at, probably not, because. But what I was talking to Ted is that if you do crowdfunding, you don't have one major sort of a lead investor. You have several investors taking a smaller chunk. What's on the good side a good thing for the founders is that they're probably not a board seat that you have to give up. So
right.
Yeah, but also because you have so many investors investing in your company, unless that you have a lead investor who can follow you on a Series A or Series B or something like that, you're gonna have a really hard time raising Series A because if none of your angel round or seed round investors follow you on the next round, then that's a strong signal that those investors don't believe in your company.
So one of the challenges with crowdfunding is obviously, again, like you said, it's the advice that you get or the lack of advice that you get when all of your investors are on another end of the internet somewhere, and they might not live near you or maybe even have expertise in the area. So one of the questions I had was, maybe if you, each of you could tell a quick story about the most valuable advice that you've gotten from one of your investors, sort of as a benchmark for an example of what you can't get from crowdfunders.
I think I just said it though.
Go for it. Or Royce, you want to go first? The most valuable advice or insights that you've gotten from one of your investors that was really hands-on and really helped you move forward. Because a lot of what people say about crowdfunding is that's what you lose out on. So I'm curious if you have an example of some kind of advice that you've gotten at a certain point in time that really helped.
I think it was actually not an advice. It was my previous company that because the investor wanted us to grow the company rapidly in terms of revenue and size, they have forced us sort of on the board to merge with another company, bring them in. And that was actually a really rough decision. And that was right before the 2001 crash. Well, I wouldn't have gone that far, but they wouldn't crowdfunded, so it wouldn't have pushed us into doing that. But it did back then, and then we actually learned and grew and survived that. And I think the company was transformed. So it was a bad push, but
Yeah.
it turned out to be blessing in disguise.
Ty, you think?
Well, I guess the best advice I got from an investor is while I was still working at Toyota, it just encouraged me to get started on the car farm. I was just noticing a trend of so many people having problems buying a new car in the US. So I asked him if a platform like Car Farm existed, would it be a good thing for the whole entire public? And he just told me to just get it started.
I was just thinking about some of my experience with some of the investors that I've worked at before. And before running CrunchBase, I was running product at a company called Oodle, and we were in the midst of trying to sell the company. So Oodle was successful in that we had 15 million users a month, and it was a classified ad platform. We were actually in like the top 3 in the various markets that we operated: cars, real estate, apartments. But there was a situation with that, or the situation was that if you weren't number 1 in these markets, it was very difficult to have a very positive outcome. Those markets were sort of a winners take all market. And one of our board members, we came to a conclusion we had to sell the company. And one of our board members was instrumental in getting that done. The board member was the one that made all of the introductions. And they were the one that helped craft what the value of the company was and the value of the team was well beyond what you would ever see on paper. And one of the big lessons of that was that, if you don't have people on your team who are experienced in selling companies or in the experience merging companies or raising additional funds, you really can't even get in to see the right people. And that applies even if you're a reasonably successful startup. If you're trying to sell something, how do you position what it is that you're trying to sell? Because you could take a company and you could say, hey, we have all of these users and we're making this much money. Or you can take a company and you can say, we have a vision, and this is what our vision is, and this is how our vision plays out with this other company, your strategy. And it's totally different. On the one hand, you'll get paid for, maybe a small multiple on your revenue. And on the other hand, people will think, gee, without you, I can't double my revenue or triple my revenue. And your value goes way, way up when you can start having these strategic conversations. And one thing that I found is that the really good investors do that all the time. You know, that's their job. They're out there trying to figure out how companies merge together and who buys who and stuff like that. But as the founder of a startup, you are so focused every day on, you know, am I gaining new users? Am I closing new deals? You know, did I sign a new contract? It's very difficult for you to step back and say, how is my company going to make another company 2, 3, or 10x better? And so when you get to that point where you have to sell or where you have to raise money, without that outside guidance, it's really hard, and you end up hitting these dead ends. And you see it all the time. You see companies that have fairly good traction, and then they're sold for very, very low amounts of money, and you kind of scratch your head and wonder why. And a lot of times it's because they didn't have that cheerleader or that investor who was stepping in to help them. So my next question is about data transparency. And I'm wondering what you guys think just from the perspective of founders. You know, do you find it comfortable or uncomfortable with the amount of data that's out there about companies and that's available to venture firms on a daily basis? You know, maybe start with you, Royce.
The amount of data that's out there in terms of other companies, just from my company.
Or just the amount of data that investors end up looking at and the investors want to see, and that ends up being just sort of out in the ecosystem about your company. Is that a comforting thought, or does it make you a little bit uneasy?
That's actually comforting. I mean, because I have access to all the data they have it too, right? So I can also get a feel of the market just as well as they can, and my competitors and whatnot. So it doesn't bother me.
Yeah, I also agree with Royce. I don't think it's a hindrance. However, with the car farm, there's not much market data out there. So that's why we're trying to become the company that can provide the data and analytics for the whole entire industry.
Okay, so my last question is about company pivots. And I'm curious about what you said about your cameras, that when they initially came out, you know, it was about selling them to places like Apple. Did you start off imagining yourself in the education market?
Not at all. I never imagined that we'll be in the education market. But pivot is exactly the exact word. We started out making Skype phones, handset, USB handsets, plug into the computer and use Skype with it. And it was pretty successful. Our first product, through clean and easy to use design, we sold about 1 million pieces of those. So that's how we got started. But then the Skype, you know, audio hardware markets died because of smartphones. Just completely wiped out. So we were forced to try different product lines. We have digital photo frames and whatnot. We were sold through Fry's and Apple Store in the US. And that really actually did not help us at all. They really burned us because, you know, the retail chains, they don't pay, they take a lot of margin. And when we hit the educational market, we found an opportunity in that. We saw this opportunity being so much better and profitable and meaningful that we actually, that was 2 years ago, we really pivoted the whole company to gear toward the education market.
Was it challenging to pivot your team? You know, you have all, you know, as the founder, that I guess you spend all of your time thinking about what's happening ahead and trying to guide the company. But what about pivoting all the people who are just working on these things day to day?
I think the hardest person to pivot in the whole team is me, because I'm the designer of all the products. You know, I started out by, you know, I want to design something cool, something great for the consumer that would be a hit. But I have to adjust, get my mind wrapped around, you know, how this company will really grow, and the team is actually okay with it. The team is actually my team is actually very practical. They see where the sales are coming from. They see the profit coming from. They are all happy to go that direction.
has Car Farm pivoted at all since its inception?
Maybe not so much pivot, but there's been a evolution of the product. In the beginning, it was just a big chat room where all the salespeople hung out, and then consumers would go in there and say, "I want this car." But a lot of consumers had a lot of trouble with it because you got a bunch of salespeople hanging out in one room, and you go in there, you're the only buyer there, so they feel like they were getting ganged up on. So we moved away from that, and we reiterated several times after. But I think we had a pivot in our business model more than the product itself. So in the beginning, we wanted to charge per every car sold, but through different laws and regulations, we couldn't do that. So we became a sales lead generation model. And even the sales lead generation model, you can only make so much money with that. So we're actually going into more custom analytics, business information, those type of things.
All right, I thought actually at this point, see if anybody had questions. I think there's a lot of different experience here from the, larger company with what sounds like a lot of great traction, just starting off in different stages. So we start over there. I'm not sure if there's a microphone out there anywhere, but if you speak loudly, I can repeat the question. I think we're going to start that way. Way back there in the corner, next to the flashing red light.
Testing. Good afternoon, everybody. I'm Pauline from Talent Network, and also I'm doing communication services from that because I'm from a translation and interpretation and try to think about what way I have to go. But I would like to introduce some opportunity because Richard has hit me a point. I like his point that I am tired of competition in this world because there are two parts. One, that is I have an innovative idea and I can stand number 1, 2, 3 all the time and I sustain. But many other people will come together and try to compete like a Red Sea, and this utilize a lot of resources in the world. So I'm very tired of competition, actually, or entrepreneurship, but I'm trying to think about other ways. But at the same time, I would like to know different people, like this one and this one is another cell. What we need, what we have to put into filling the gaps that is missing is something very interesting. But if competition, we will never think about more than that. We are trying to compete with each other, is that right? But another thing is that about funding. I don't think that we have the approach to IT only. Back to basics, there are a lot of good products and IT platform and IT so-and-so development. What I introduced the opportunity is that outside IT, there are some other things we worth to do, like building materials, or what I can reach is like something like equal opportunity. Actually, education is like Hong Kong light up. Kindergarten is a service, but also from a business point, it's a great business education. So the point is that I think that I'm tired of competition. So I just wonder, I give a challenge to everybody. Is this the only way human being has to go?
Well, actually, so there was one question about competition, which I think is good because it kind of speaks to openness. And there's a lot of changing stuff, in particular in the United States with openness around startups. So I'm curious as what you guys think about.
And sorry, I have another question.
Hold on one second. I think we'll just stick with the competition one because there are a bunch of other questions that people had.
Yeah.
I'm curious what you guys think about that and what you think about, like, if you're open about what you're doing as you start, does that open you up to too much competition and create challenges in just getting the company off the ground?
When I got started, I talked to as many people as I could. I know there's a lot of entrepreneurs that want to keep everything secretive, and if you want to talk, let's sign an NDA form. I didn't do any of that. I just wanted to speak to as many people as possible, so that I knew that I was on the right path. Um, I don't know if that answers your question.
Do you want to add to that? Go ahead.
I love competition, actually, because it pushes companies to rethink and reinvent themselves. I am the competition to a lot of the industry leaders right now, because they are stuck in their sort of cash cow comfort zone that I get a chance to attack. But then sooner or later we'll face competition as well. But that is actually a wake-up call. So I think competition is actually pushing a lot of companies to move forward.
All right, next. Right there in front. Let's try and, since we don't have a whole lot of time, try and keep the questions short.
I'm Charles Cheng, Vice President AMA. I recently invested in a startup, and I found that along with myself and a couple of angel investors that I knew, we also have dentist angel, real estate angel, and someone else, high school friend angels. So my question for the panelists is that, what has been your experience? Can you talk about the pitfall of having too many angel investors and your experience in achieving the right balance between the amount raised and the number of angel investors?
Do you want to take that one, Royce? If not, I can answer it.
I think the perfect scenario is that you have one angel investor who never questions what you do, right? But it's not never going to happen. So you do have people that you do have to look everywhere. What's it right?
I think you can't underestimate how much time it takes to manage some people.
Right.
And you don't know how much time it's going to take to manage them until you've already taken their money. And by then it's too late. And so, when you're choosing like the set of investors, you need to make sure that there is at least one which is going to pay off such high dividends and advice that it doesn't matter how much time you spend managing them. And then everybody else, you're crossing your fingers that you're not spending most of your time doing that until you need help. Next question, in the yellow back there. You stood up.
Yeah, my name is Neil, and I'm actually the founder of Able HD. It's a portable HD monitor. And actually, I have a basic question. Actually, do we really need venture capital funding or crowdfunding or angel investor? Because I want to explain about myself a little bit. Actually, my invention right now is already got funding from the Kickstarter. It's actually the top 50 most successful campaign in 2013. Actually, I bring the product myself.
So
And
let
then-
me just make sure I understand the questions to keep it short. So the question is, do you really need angel funding?
Yeah, actually, if assume inventor like me that I can manage my own funding from the Kickstarter, and then I can manage everything, and I can hire a business consultant, something like that. Do I really need angel investor or venture capital for this?
I don't know, I mean, Royce, you might be able to talk about that because, I mean, you produced a product too that you could start selling right away. So then what's the value of having angel funding if you have that product already in place?
Actually, I have to add another.
Let's try and answer that one
Yeah,
question.
No,
just
it's not a question. Actually, I just want to inform that I will launch next campaign that I'm pretty sure that I can get several $100,000. That about the same with the 6 stage. So I wonder, should I go for the angel investor or I go by myself? Something like that.
The question is, you mean you can, if you can profit, you can make a profit from, you can generate enough sales with product already. For me, it's actually, I can't do that because I need I need funding to develop my product. I need money to make the molds to actually invest in inventory. Assume I have the money.
Well, if you have the money, then you don't need to ask for
Yeah.
more. That's a simple question. Next, other questions? He's right there in the.
What tactic or philosophy did you use when you were trying to raise money that you saw successful for yourself personally?
What tactic did one of us use to raise money that we found to be successful?
Like a philosophy or a
Or a
way that you
philosophy.
approached a problem when you were fundraising itself.
What kind of problems are you having now?
I'm actually trying to ask a question that's related directly to
It's more a
fundraising
philosophical
in
question.
Silicon Valley. It's more like I walked into this room, these guys were here, I approached it based upon this out of personal experience. What did you guys do yourselves that you saw that worked for you?
Well, I had a couple of friends who are entrepreneurs as well, and they went through the whole numbers game. So, for example, my friend, I'm not going to give names, but she ended up speaking to about 160 investors in 6 weeks and got funded from about 10 investors. You could do it that way, or you could try to network as much as possible and try to get warm introductions and have people who's going to pitch your company on your behalf. That's how I did it.
Two things that I've seen work. One, you have to solve a problem that you yourself have. If you're solving problems that other people have that you're not going to use yourself, there's a credibility issue when you're talking to investors. They want to hear your passion about it. The other thing is I've been told by a number of investors that they don't want to invest in anything unless it has a natural path to become a monopoly. Like if you think about it from an investor perspective, they want to invest in like the next PayPal of the United States, which just sort of owns the P2P payment space, or they want to invest in the next Google, where there really is only one big search engine in the United States and much of the world, or they want to invest in the Facebook or the Twitter. And this is when you start getting into like the big VCs. They want to understand how you have a path that makes you the dominant player in a market, hopefully that market being the world. Because if you can't demonstrate a path to dominance, and at least discuss it, then, of course, 99% of the people never get there. That's fine. But if you can't explain it on day one, then it's a problem. So you have to solve a problem that you yourself need to be solved, and you have to explain how you create essentially a natural monopoly and solve something for the entire world at scale. And if you can do those two things, it gets you a long way.
I have a flip question then. It's what looks like a non-dominant based technology play? Because most things on the internet have the potential to be that. They could own the entire world.
You have to craft a story that gets you to that. I mean, it depends on what the product is.
So you feel it's more of a story thing than maybe a natural.
As a CEO of a company, you're a storyteller. You're telling the story of how this idea is going to be successful. Like, don't underestimate that. I mean, there are tons of people who are extraordinarily talented and have great ideas, but they can't tell the story. And that's what venture is about. I mean, you're a salesperson, right? You're selling yourself, and you're selling your company, and you're selling your team. And you have to be able to explain, like, how you're going to change the world. And if you can't competently do that, and some people are really good at it, and some people aren't. Like, I've worked with people who are amazing, far better at it than I will ever be. And I just understood it was a talent that they had. And you know what? Those were the type of people who could go raise, $100 million. But you raise $100 million by being a great salesperson about yourself and your team and stuff like that. More questions?
My question is, assume you are now in the elevator, you got 1 minute, and then you meet an investor. So how would you initiate the conversation and grab his attention? Another thing is, within that same 1 minute, how would you make the judgment? This guy is going to help you.
You have 1 minute to answer that question.
Boy. Personally, I never talk about my company on a first meeting. You know, if you just randomly run into an investor, they have other things to do. They're not gonna want to hear, you know, your product or what you do. Just try to get his contact number and try to set up a meeting after. But I never pitch my company, do an elevator pitch.
You mean
Royce?
not do blind dates? Right. Just to answer your question, I think follow up on what you said about solving a problem. I think that 1 minute could very well be used to making that problem that you're solving relate to that investor or that person that you're talking to, so he can feel the problem. For instance, if it's for my product or about education, I will probably ask the investor person that how he feels about education of today, and then lead that in. And try to do it in 1 minute, which is very hard.
And you'll never be able to tell how good of an investor they are unless you look at their background.
So can you got listing or some kind of...
No, you have to look at their background. I mean, you can see if there's a personal connection or not, but you know, people do manage investments very differently. More questions?
Is there any database where I can tap for more like I want hand-holding help, not, I don't need money.
I think that
And the
there's
field
no...
is operational intelligence.
Okay, so I don't think that, well, I don't know. I can speak from the United States. It's community, right? Startups are started by communities. You know, it's people helping each other.
No, I mean, because you're handling the CrunchBase, so I thought CrunchBase has got any kind of database.
Yeah, but CrunchBase, I mean, CrunchBase tells, you know, what the other companies are, but help starting companies is about connections that you form with other people, and it's about them helping you. And there's, I mean, sure that there's stuff you can go read, but a lot of it is about the community you put yourself into. Is there anyone over there? Back in the corner?
Just speak a little louder. Some investors tend to be not investors. They just want to steal all your trade secrets. And usually, how do you identify them?
Okay, so that's a good question. I think there's two things to that I guess I want to touch on. One is if you're that paranoid about competition, and I think it speaks to the question that was over there, I think you're overlooking the fact that truly passionate entrepreneurs are focused on what they want to get done. And if they hear a good idea, the really good entrepreneurs, the ones that are actually going to make it, are not going to change course every time they hear a new idea. Because if they are, they're always chasing, and they will always lose. So this fear that somebody else is going to take your idea, in a way, is unfounded. I think the other place where people have a lot of fear is with big companies. It's like, oh, I'm doing something in the social space. I can't let Facebook know about it. I mean, trust me, you know, they have 10,000 people, probably 5,000 of them are engineers. If they want to do your idea, it's kind of over. And they were going to figure that out anyways. So you might as well talk about it and make sure that it's not on their roadmap. And this is fundamentally, I think, one of the things that makes the San Francisco Bay Area, Silicon Valley, whatever you want to talk about it, it makes it fundamentally different than other parts of the world. If you're at lunch in Silicon Valley and you meet somebody and you know you're talking about things, and you may just have met them, and you may have no idea who they are, you'll tell them your whole business plan. And they'll tell you theirs. And nobody sits down and says, oh, will you sign an NDA? And nobody does a background check to find out like if the person's going to steal their idea or not. Everybody just talks. Not only that, but everybody helps each other out. If you walk into a VC meeting in the Bay Area, for the most part, they will offer you a bunch of advice. And they're doing it not because they expect to invest in your company. They may know from the minute you walk in that they have no interest at all in what you're doing, or it may be outside of their investment thesis, but they're going to help you anyways. And this is how these social connections get started. You know, I mean, honestly, like running CrunchBase is an amazing opportunity for me. I would have never gotten that position if I hadn't helped a whole lot of other people get things done. And if I would have asked all those people that I helped, you know, what's in it for me, they would have looked at me kind of silly and be like, I don't know, and they would have moved on. And it's very hard to, I think it's challenging to describe that culture, but that's what makes the Bay Area different. And when you walk into coffee shops in the Bay Area, or you walk into like the cafeteria at Twitter, you hear tons of people talking about businesses that they want to start and how they intend to raise money and what they want to do. And people have let go of the fear, and they've let go of this concern that like somebody else is going to take their idea. And that's what creates these communities, and these communities that help each other. And ultimately, it's those communities that help people get funded. You know, you don't walk into, you know, the Bay Area and decide you're going to walk up and down Sand Hill Road where, you know, all the VCs are and knock on all the doors. It doesn't work that way. It's about meeting people and having them say, you know, I don't like your idea, but here's some advice, and here's 3 other people you should go talk to. Let me know how it goes. Maybe I'll change my mind. And that's how you meet 150 investors. But it's just by you know, opening yourself up and, you know, taking in that feedback. I think we might be out of time. Yeah? So I think we should end there. But I think there's a cocktail reception, so I think we're all around for that, so we can answer more questions then. So thanks.